Now, if there's one executive in Australia who's sometimes underestimated, it's Meg O'Neill. She's not only a keen strategist, but also capable of pulling off a big deal like the BHP oil and gas demerger, or a major project like the $19 billion Scarborough gas project. The problem for Meg O'Neill is Australia's political system and the quick demonisation of her key commodity, gas. She argues tirelessly that gas is an essential part of the energy transition. Her opponents argue relentlessly that it's a part of the problem.
Look, I think it's important to put all of these decisions in the context of our overall strategy, which is to thrive through the energy transition. And to do that, we've looked very carefully at the sorts of energy products we might be involved in. And we are a firm believer that LNG is an energy product that is going to be needed not just today, not just in 10 years, but in 20+ years. So as we think about our business prospects, we are always looking for ways that we can grow in those areas that are strategically aligned. With Santos, another big LNG player in the Pacific, we opened a conversation to see if there was an opportunity to bring the two companies together. Got to a point where that wasn't an opportunity, and so we've gone our separate ways.
I get that it's not an opportunity, but I'm trying to go down as to whether that is a return on your capital, which is one of your key metrics, whether it was actually the time horizon, because obviously as certain fields sort of are depleted of gas, you need other projects coming on. Was it actually the timing, the jigsaw puzzle, and the way in which the two companies would have otherwise fitted together? Yeah,
so I'm not going to talk about the specifics of that opportunity, but I'll just go back and reinforce that Woodside, we've got a lot of capability in LNG. We've got some of our own LNG opportunities that we're bringing forward. Scarborough is probably the most notable example. And we'll continue to look for ways that we can grow our LNG business.
Okay, so even in Scarborough, you've brought on 2 new Japanese customers as investors in that business, which frees up capital for you, allows that project to go ahead. How important is that in terms of you having the capability of investing into your future fields?
Well, I'm glad you raised the Scarborough partners. We are delighted to be able to welcome LNG Japan and JERA, who are 2 top-tier Japanese energy companies, into that venture. And not just are they investing in Scarborough, but they are signing up for LNG offtake from Woodside. And with both parties, we've agreed to work together on new energy partnerships. So much more than just equity, it's a strategic partnership with both LNG Japan and JERA. Fantastic outcome for us.
And the reality is that that also creates some sort of robustness in the Japanese energy grid. That's the key to this, isn't it?
Well, and that's why those companies are at the table, is as they're very closely connected with the Japanese government, and as the Japanese government thinks about their energy mix in the 2030s and 2040s, this is a clear signal to us, and should be to the market, that LNG is part of that mix.
Okay, so these results also show the impact of the falling energy prices over the past 12 months. Last year almost being a little abnormal in some ways. Now those prices have normalised. Would you say that this profit that you've just announced, that this is a more normal profit for what we'd expect from Woodside?
Last year was absolutely extraordinary. After Russia's invasion of Ukraine, that caused waves throughout the global energy market. Oil needed to flow from Russia to places not the US and Europe, and gas, particularly when Europe's supply of gas from Russia was cut off. It had significant ripples in the LNG market. So 2022 was quite unusual. 2023, we would describe it as normalized. Look, the crystal ball game is a difficult one to predict. I would suggest that 2023 is more representative of the long term. But the reality is we've got geopolitical question marks continuing. You know, we've got war in the Middle East. Thus far, that hasn't particularly affected trade flows, but it's something we watch closely. We've got an election in the U.S. The U.S. economy is still a very significant contributor. The Chinese economy is significant. So we'll be watching those 3 factors to see what that means for energy demand and energy pricing.
And though you keep watching those factors, the reality is that you have a necessity to keep building out new projects into the future, the Gulf of Mexico being one prime example of that right now.
Yeah, exactly. So whilst the short term you're going to always see a bit of volatility as the market ebbs and flows and economies, you know, grow and contract, over the long haul, as we look at things like population growth, economic growth holistically, we do see continued demand for oil and gas. even in a Paris-compliant decarbonising world.
Which is something that you've also included into this set of results, that you will now judge future projects on your ability to meet certain emissions targets.
Look, and we've actually been doing that for a while. So in our Climate Transition Action Plan, we described that work that we had done when we took our investment decision on Trion, which is a oil field in the Mexican sector of the Gulf of Mexico. And we went through 6 considerations that are climate related that we looked at before we made that investment decision. So that's been part of our thinking for a while, actually.
Okay, so that also becomes a part of the thinking of governments, as you know as well. You're only too conscious about the way in which you have those conversations with government. Now, the reality is that some politicians don't understand the transition. That's as true today as it ever has been. Is that frustrating to you as a chief executive of the company that is one of the largest producers of LNG in the world?
I think anywhere you go in the world, you'll find that energy literacy is pretty basic. Most people, especially in the Western developed world, take for granted that you hit a switch, a light comes on, that you hop in the car and you can go, to your corner store and put fuel in it that'll carry you for 400 kilometers. Everybody takes that for granted, and there's not much appreciation for the complexity of activity that underpins delivery of those services. Now, if you're in the developing world, you know that to light your home, you have to go by foot and gather wood. So there's a lot stronger understanding of energy value chains in some of the less developed parts of the world. But in places like Australia and the US, that lack of understanding means that often folks can jump to simplistic conclusions without understanding the complexity of the problem.
Which is that we can do without gas. That's the simplistic conclusion that some people might jump to.
There are people who would say we should just stop coal, oil and gas today and hope for the best. And look, we fully support investment in renewables. We fully support working towards the Paris Agreement. But we're also mindful that if you do it in a disjointed way, that the people who are going to suffer most are the people who can least afford it.
One thing you did mention today is, notwithstanding the energy transition that's underway, is the enormous demand that's going to come from Asia in particular. Now, at the moment, I think China's building, a dozen nuclear reactors. Japan's considering this again. You've got other countries starting to build out their nuclear capabilities, but gas is also still in the mix for every one of those countries.
One of the things that's very impressive about the Asian nations that you just mentioned is their long-term forward thinking around energy mix. So Japan, China, Korea are all very strategic in thinking about how they best meet the energy needs of their economies and their citizens over the long haul. And a key word behind all of their strategies, diversification. That's diversification in type of energy. That's diversification of supply source for every single type of energy. And you see that play out in China, Japan, and Korea alike. They are very worried about too much concentration risk. I think they've learned the European lesson pretty well. China continues to invest in nuclear, coal, renewables, and gas. It's an all-of-the-above solution.
So in other words, that's about making your country as competitive from an energy point of view as we can. We talked about competition for capital, but the very heart of it goes down to the competitiveness of a nation.
I think there's a very clear link between energy security, economic security, and national security. If you have the fuel you need to keep your economy going, it makes you strong as a nation. And that's something that's clearly understood by many of those nations.
Do you think it's understood well by Australia?
Look, I think that understanding is growing.
But not as good as some of those other nations?
Look, the politics of climate change here are probably more intense than some of those other nations, and that's probably driven a way of thinking about how to tackle the energy question. That's been pushing very hard for renewables. But look, to the credit of the government, I think we've seen a stabilization of their views over the last 6 months in particular. We're starting to see a greater recognition of the role that gas can play, particularly if you're going to turn off coal-fired power stations. You've got to have something for those cloudy days. You've got to have something for the evening when the sun's not shining. So I think that recognition is starting to dawn. But again, climate politics in Australia are very intense.
Meg O'Neill, always good to chat to you. Many thanks for your time today.
Thanks, Ross.